They used to call me the Boy Plunger. Made my first $1,000 when I was just 15 years old working in a bucket shop in Boston. Lost it all the next week. Made it back the week after that. And you want to know something? That cycle taught me more about trading than any book or mentor ever could. Because trading isn't about being right all the time. It's about being right when it matters, and having the courage to bet big when you know you're right. I've made and lost multiple fortunes in my lifetime. $4 million in a single day during the 1907 panic. $100 million in 1929 when everyone else was jumping out of windows. I've been broke more times than I care to remember, and I've been richer than most men dream of being. And through all of it, through every boom and bust, I learned something that most traders never figure out. The market doesn't care about your hopes, your dreams, or your bills. The market simply is. And if you want to build real wealth, you need to stop fighting what is and start flowing with it. The first rule I'm going to share with you is the foundation of everything else. Without this, nothing else matters. You ready? Here it is. The trend is your friend until it isn't. Sounds simple, doesn't it? But most traders spend their entire careers fighting this one basic truth. They see a stock going up and they think, that's too high. It's got to come down. Or they see one going down and they think, that's a bargain. I should buy. And they get slaughtered. Listen to me carefully. The market can remain irrational longer than you can remain solvent. I learned this the hard way, multiple times. When a stock is rising, there's a reason. Maybe you don't know the reason. Maybe nobody knows the reason yet. But the market knows. The market is always digesting information that you and I don't have access to. The tape tells you everything you need to know if you learn to read it properly. In 1906, I saw Union Pacific climbing and climbing. Everyone said it was overvalued. Everyone said it had to correct. But I watched the tape, and the tape was telling me something different. It was telling me that someone knew something. So I bought, and I kept buying as it went higher. And I made a fortune because I trusted the trend instead of my own opinions about what should happen. The second rule ties directly into the first. Cut your losses quickly and let your profits run. This is where most traders destroy themselves. They hold on to losing positions hoping they'll come back, and they sell winning positions too early because they're afraid of giving back their gains. It's completely backward. When I enter a position, I already know where I'm wrong. I already know the price point where my thesis is invalidated. And when that price is hit, I'm out. No questions asked. No hoping. No praying. I'm just out. Because hope is not a trading strategy, it's a path to the poorhouse. I've seen more men ruined by hope than by any other emotion. But here's what separates the great traders from the mediocre ones. When you're right, when that position starts moving in your favor, you add to it. You pyramid up. Most people think this is risky, but it's actually the safest thing you can do. Why? Because the market is proving you right. You're not averaging down into a losing position, you're scaling up into a winning one. Every additional share you buy is bought at a profit on your existing position. I remember during the 1929 crash, I was short the market, and as it fell, I kept adding to my shorts. People thought I was crazy. They said, Jesse, you're going to get caught. But I understood something they didn't. I understood that a market in free fall doesn't just stop. It builds momentum. Fear feeds on itself, just like greed does. So I kept shorting, kept adding, and I made over $100 million while the rest of the country lost their shirts. Now here's the third rule, and this one might be the hardest for most people to accept. Trade what you see, not what you think. Your opinions mean nothing. My opinions mean nothing. The only thing that matters is what the market is actually doing. I don't care if a company has the best product in the world, or if the CEO is a genius, or if the fundamentals look amazing. If the stock is going down, I'm not interested. And I don't care if a company is garbage, if everyone says it's worthless, if the newspapers are screaming about fraud. If the stock is going up, I want to be long. This is about reading the tape, about understanding price action. The market is telling you a story every single day. Volume, price movement, the way a stock reacts to news. These are all chapters in that story. Most traders ignore the story the market is telling them because they're too busy listening to their own internal narrative. I'll give you an example. In 1924, I had a strong opinion that wheat was going to rally. I had done my research, talked to farmers, looked at supply and demand. Everything pointed to higher prices. So I went long, and the market went against me. Day after day, wheat kept dropping. Now, I could have held on to my opinion. I could have added to my losing position, convinced that I was right and the market was wrong. But I didn't. I cut my losses and got out. Because what I thought didn't matter. What mattered was what the market was doing. 3 months later, wheat did rally, just like I predicted. But by then, I had moved on to other opportunities where the market was actually confirming my thesis. This is the discipline that builds wealth. Being willing to be wrong, to admit it quickly, and to move on to where the opportunity actually is. Let me tell you about the fourth rule before we dive deeper into the psychology. The fourth rule is this: there is nothing new in Wall Street. There can't be, because speculation is as old as the hills. Whatever happens in the stock market today has happened before and will happen again. I'm not talking about the specific stocks or the specific circumstances. I'm talking about the patterns, the psychology, the waves of greed and fear that drive prices. You see, the game doesn't change. Human nature doesn't change. Men were greedy 100 years before I was born, and they'll be greedy 100 years after I'm gone. They panic now, just like they panicked during the panic of 1907, and just like they'll panic during the next crisis. If you can understand this, if you can really internalize it, you'll stop being surprised by market movements. You'll start recognizing the patterns. I've watched the same patterns repeat themselves dozens of times throughout my career. A stock bases, then breaks out. Volume expands. More buyers come in, pushing it higher. The newspapers start writing about it. Your shoeshine boy starts giving you tips about it. And that's when you know the top is near. Then comes the distribution phase. The smart money starts selling to the dumb money. The stock stops making new highs. It starts acting heavy. And then finally, it breaks down, and the cycle starts all over again on the downside. Every bull market has these same characteristics. Every bear market follows the same script. The names change. The technology changes. The excuses change. But the pattern remains constant. Because the pattern is driven by human psychology, and human psychology doesn't evolve as fast as we'd like to think. In 1929, everyone thought it was different. They said we'd entered a new era of permanent prosperity. Stocks could only go up because we had new technologies, new efficiencies, new ways of doing business. Sound familiar? It should. Because they said the exact same thing in the 1920 seconds that they said during the dot-com bubble, and that they'll say during the next bubble. The words change, but the music remains the same. Now let me tell you about rule number 5, and this is crucial. The big money is made in the big swings. You're not going to get rich scalping for quarters and dimes. You're not going to build generational wealth by taking quick profits on every little move. The real fortunes are made by those who have the patience and the nerve to sit through a major trend. This goes against every instinct most traders have. They see a profit, and they want to lock it in. They're afraid it'll disappear. I understand that fear because I've felt it myself. But I learned to overcome it because I realized something important. If you're right about the direction, why would you get out? If the trend is intact, if the momentum is building, if everything is confirming your position, getting out is the worst thing you can do. When I was short during the 1929 crash, there were so many times I could have covered. So many times I could have taken my profits and walked away. Every day, people were telling me I should get out, that I'd made enough, that I was being greedy. But I stayed short because the trend was still down. The market was still showing weakness. The selling pressure was still intense. And because I had the discipline to sit through that entire move, I made more money than I'd made in my entire life up to that point. This is what separates the professionals from the amateurs. Amateurs think trading is about being active, about making moves, about doing something. Professionals understand that sometimes the hardest thing to do and the best thing to do is absolutely nothing. Just sit there. Let the position work. Let the trend develop. The market will tell you when it's time to get out, just like it told you when it was time to get in. Here's rule number 6, and I want you to write this down. Never average down on a losing position. This is a cardinal sin, and I've seen it destroy more traders than almost anything else. When you're in a losing position, adding to it is not dollar cost averaging or being smart or buying the dip. It's throwing good money after bad. Think about what you're actually doing when you average down. You entered a trade with a thesis. The market has proven your thesis wrong. And instead of accepting that and moving on, you're doubling down on being wrong. You're increasing your risk in a position that's already going against you. It's madness. The only time you should be adding to a position is when you're winning, not when you're losing. When the market is confirming your analysis, that's when you pyramid up. But when the market is telling you you're wrong, you listen. You get out. You preserve your capital for the next opportunity. I once watched a trader lose everything because he kept averaging down on a cotton position. He was convinced cotton had to go up. He had all these reasons why it should go up. And every time it went down instead, he bought more. I'm getting a better price, he told himself. What he was really doing was digging his grave deeper with every trade. Eventually, he got a margin call he couldn't meet, and he was wiped out. If he'd just taken his initial loss and moved on, he'd still be trading today. The 7th and final rule is perhaps the most important of all. The market is never wrong. Opinions often are. Your job as a trader is not to prove yourself right. Your job is to make money. And the only way to make money consistently is to align yourself with what the market is actually doing, not what you think it should be doing. I can't tell you how many times I've heard traders say, the market is wrong about this stock. No, the market is never wrong. The market is the ultimate arbiter of value. It's the sum total of everyone's knowledge, opinions, fears, and hopes. You don't fight that. You respect it. This means being flexible. This means being willing to change your mind. I've gone from bullish to bearish on the same stock in the same day because the market told me I was wrong. There's no shame in that. The shame is in being stubborn, in holding on to a thesis that the market has already invalidated. Let me share something personal with you. There were times in my career when I let my ego get in the way. Times when I thought I was smarter than the market. Times when I held onto positions because I couldn't admit I was wrong. And every single time, the market taught me a painful lesson. The market is a harsh teacher, but it's a perfect one. It rewards humility and punishes arrogance without fail. These 7 rules have guided me through some of the most turbulent markets in history. They've helped me make fortunes and, just as importantly, they've helped me preserve those fortunes. But here's what I need you to understand. Knowing these rules isn't enough. You have to live them. You have to internalize them until they become instinct. You have to feel these rules in your bones, in your gut, in every decision you make. Because when you're in the heat of the moment, when you've got real money on the line, when the market is moving against you or screaming in your favor, you won't have time to think. You'll only have time to react. And if these principles aren't burned into your subconscious, you'll react emotionally instead of strategically. I want to tell you about the time I learned this lesson in the most brutal way possible. It was 1934, and I had lost almost everything. Not because I didn't know these rules, not because I wasn't skilled, but because I stopped following them. I let myself get emotional. I let myself get desperate. I started making trades based on what I needed to happen instead of what was actually happening, and the market destroyed me for it. I remember sitting in my apartment, looking at my account statements, realizing that I'd violated every single principle I'd spent decades learning. I'd averaged down. I'd fought the trend. I'd held on to losses, hoping they'd come back. I'd let my opinions override what the tape was telling me, and I paid the price. But here's the thing about rock bottom. It gives you clarity. When you have nothing left to lose, you can see things as they really are. And what I saw was that the rules hadn't failed me. I had failed the rules. The principles were sound. The methodology was proven. I had just stopped applying it. So I started over. I went back to basics. I paper traded until I proved to myself that I could follow my own rules again. And slowly, carefully, I rebuilt. Not as fast as I wanted to. Not as dramatically as before, but solidly. Because this time, I wasn't trading on hope or ego. I was trading on discipline and respect for the market. Now, I want to address something that might be bothering some of you. You might be thinking, Jesse, these rules sound simple. If they're so simple, why doesn't everyone follow them? And that's exactly the right question to ask. The answer is that simple doesn't mean easy. These rules are simple to understand but incredibly difficult to execute because they require you to do things that go against your natural instincts. Your instinct is to hold on to losses because admitting you're wrong feels bad. Your instinct is to take profits quickly because having money feels good. Your instinct is to average down because you want to believe you're right. Your instinct is to fight the market because submission feels like weakness. Every single one of these rules requires you to override your instincts, and that's why most people can't do it. But you're not most people. If you were, you wouldn't be here right now, learning from my mistakes and my successes. You're someone who's willing to do the hard work, to develop the discipline, to become the kind of trader who can build and keep wealth. Let me give you some practical guidance on how to actually implement these rules. Start small. Don't try to master all 7 at once. Pick one, maybe cutting losses quickly, and focus on that for a month. Every single trade, no matter what, you cut your losses at your predetermined point. No exceptions, no excuses. You do this until it becomes automatic, until you don't even have to think about it anymore. Then you add the next rule, maybe letting profits run. You practice holding positions even when every fiber of your being wants to take the money and run. You trust the trend. You trust your analysis. You let the market tell you when to exit instead of your fear. One rule at a time, you build the foundation of a professional trader. It takes time. It takes patience. It takes a lot of small losses while you're learning. But I'm telling you, from someone who's made and lost more money than most people will see in 10 lifetimes, this is the path. There are no shortcuts. There are no secrets. There's just discipline, consistency, and respect for the market. Now, before I leave you today, I want to talk about something that goes beyond the rules. I want to talk about mindset. Because you can know all the rules in the world, and you can follow them perfectly, but if your mindset isn't right, you'll still fail. Trading is not about getting rich quick. It's not about hitting home runs on every trade. It's not about being right all the time. Trading is about sustainable edge. It's about making slightly more when you're right than you lose when you're wrong, and being right slightly more often than you're wrong. Over time, with consistency, that edge compounds into wealth. But most people can't accept this. They want excitement. They want drama. They want to turn $1,000 into $1 million overnight. And that desire destroys them because it makes them take stupid risks, violate their rules, and chase instead of wait. The best traders I've ever known are frankly boring. They follow the same process every day. They wait for their setups. They execute their plan. They manage their risk. They don't have exciting stories about how they doubled their account in a week. But they have something better. They have consistent profits, year after year, decade after decade. That's what I want for you. I don't want you to be a flash in the pan, someone who has one good trade and then blows up their account. I want you to be here in 5 years, in 10 years, in 20 years, still trading, still growing your wealth, still mastering your craft. You have everything you need now. You have the rules. You have the framework. What you do with this information is up to you. You can watch this video, nod your head, and go right back to making the same mistakes you were making before. Most people will do exactly that. Or you can decide right now, in this moment, that you're going to be different, that you're going to put in the work, that you're going to master these principles no matter how long it takes. The market will still be here tomorrow. The opportunities will still be there. But the question is, will you be ready for them? Will you have the discipline, the patience, the mental fortitude to execute when your moment comes? I've given you the map. I've shown you the path I walked. The path that took me from a 15-year-old kid in a bucket shop to one of the most successful traders in history. It wasn't luck. It wasn't magic. It was these 7 rules, applied consistently over decades. Now it's your turn. Take what I've taught you and make it your own. Test it. Prove it to yourself. And when you do, when you start seeing the results, come back and leave a comment below. Tell me which rule resonated with you the most. Tell me about your journey. And make sure you watch the other videos on this channel where we break down more strategies and insights from the greatest traders in history. The game is still the same. Human nature hasn't changed. The patterns are still there, waiting for those who have the eyes to see them. Be one of those people. Be the trader who understands that wealth isn't built overnight, but it is built one disciplined decision at a time, one rule followed at a time, one trade executed properly at a time. That's how fortunes are made. That's how legacies are built. And that's how you'll join the ranks of truly successful traders. The market is waiting. Are you ready?